The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, folks. Happy Monday to you all. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Breakout Investing airs 5 days a week on the network from 3 to 4 Eastern. You can dial 877-927-6648. That is the toll-free number to use if you want to give me a call, talk about this market. Don't forget to listen on TFNN programming on your smartphone. That's a cool way to do it. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. And don't forget about Tiger TV on the homepage of TFNN.com. Channel 1, my show is carried live. It is archived on Channel 13 with Tiger TV. You can not only get the show audio, but you can also look at charts live right along with me. Tiger TV also viewable on your handheld device. Just open your smartphone browser again. Type in TFNN.com. Over on the top right-hand side of the homepage, you will see a box with 3 cell phones in it. And just click that box. It'll recognize what type of device you have and start streaming Tiger TV right on your phone. All right, checking in on the major averages here. Dow Jones Industrial Average down 94 points at last check, about 0.7% decline to 13,915. Looks like a hairy decline for stocks today, but again, when you look at the scope of the market's gains since mid-November, you're talking, 10, 11% higher for the market. You've got some selling that we're not used to seeing in the market today, but looking at the Dow with the 10-day, 20-day, 50-day simple moving averages plotted here, the Dow is still amazingly trading above its 10-day moving average. And again, what we talked about last week is that after a big gain for the market, really a trip down to the 50-day moving average for the Dow would only be a pullback of about 4 or 5%. So really not that significant considering where the market has come from. So, listen, stocks could use a breathing period here. It may or may not happen. Hopefully you've got some cushions in stocks that you own where you can afford to sit through maybe some volatility that could be coming up in the market. Let's take a look at the S&P 500 here. The SPX. See the S&P 500 sitting right at its 10-day moving average right now, right at basically 1,500, 1,499 in that area, down a little more than 13 points, almost 14 points, 0.9% decline for the S&P 500, and the NASDAQ composite here is below its 10-day moving average, sitting right at its 20-day moving average here, selling a little more intense in tech stocks. The S&P 500 down 1.2% to 3140. Taking a look at volume in the markets today, volume has not been that heavy pretty much through the whole session. Right now we're tracking about 9% lighter on the NASDAQ. On Friday, NASDAQ volume totaled 1.97 billion shares. So we're trading about 10% lighter than that today. On the New York Stock Exchange, we are tracking about 15% lighter than the 752 million shares we saw on Friday. So, translation, not much juice behind the selling today. That's good, but there are some growth names as expected when the market undergoes some profit taking. Some growth names are going to fall a little bit harder than the broad market. We'll take a look at some of those in a little while. Merger and acquisition news. Oracle announces plans to buy network gear company Acme Packet for about $2.1 billion. The deal values Acme Packet at $29.25 a share. Let's check in on shares of Oracle, see what's going on there. Oracle, the acquiring company here, it's been a monster performer. You can see that. Big gap up for Oracle back in December, pulls back down, fills its gap basically, then gaps up here. You see this gap here, and then it comes down, and Tiger TV fills the gap, then gaps up again. Very extended headed into today. Oracle is one of these stocks that definitely needs to pause and consolidate gains here, maybe build a new base. But it is down 2.9% to 35.16. APKT, Acme Packet, the acquiree, getting a nice premium here. It gapped up, trading around 29.32, up 22.5% on the day. We have some IPOs on tap this week. Actually, a pretty busy week of upcoming IPOs. Boise Cascade, that's going to trade under the ticker symbol BCC, wood products manufacturer and building materials distributor. Not sure when it's coming out, but the company plans to raise $200 million by offering 11.8 million shares at a price range of 16 to 18. And these 3D printing firms, kind of sitting around their 50-day moving averages right now. Names like 3D Systems, Stratasys. We've got another 3D company coming public this week called X1, EXONE, X1. It's going to trade under the symbol XONE. They plan to raise $75 million by offering 5 million shares at a price range of 14 to 16. Very small company. Taking a look at let's see, start with the U.S. dollar index today. Dollar strengthening, euro weak, dollar up. Dollar index last trading around 79.56, up 0.5% on the day. The dollar's strength did not get in the way of a rally in gold today. April gold up $5.80, 0.4%, settles at $1,676.40 an ounce. So the dollar up and the euro down. Let's take a look at the FXE. This is the currency share is Euro Trust, which basically tracks the price of the euro. It is right now at 134.12, down 1% on the day. Some headlines out of Europe earlier today. Some political uncertainty in Spain over the weekend. Spain's prime minister denied allegations that he and members of his party accepted secret payments. Spain's opposition party calling for his resignation. So also had a call out of PIMCO today, Bill Gross, saying to buy Italian bonds. So we'll see how that plays out. In the gold space, we did hear from Randgold Resources today, gold producer here. Let's see here. Well, we'll just kind of GOLD. There's Randgold Resources. The stock gaps up. It is still trading up 2.8% to $98.35, but after hitting an intraday high of $100.78, it is pretty much trading at its session low. So trying to reclaim both its 50 and 200 day. You can see these former support levels are crossing right now, but so far, Randgold Resources having a difficult time getting back above the 50 and 200-day moving average after early strength, trading near session lows. The numbers at Randgold on the surface, not too good. I didn't get a chance to get deeply involved in the earnings report, but it does look like a miss on the bottom line and top line. They did raise their annual dividend, or they have plans to raise their annual dividend 25% to 50 cents a share. Earnings down 1% from a year ago to $1.31. That was a penny below estimates. Sales up 23% to $381.6 million, but that was below the consensus estimate of sales of $428.6 million. So gold still, Randgold Resources still outperforming today, up 2.8% to $98.35. March crude oil ends at $96.17 a barrel, down $1.60. Yield on the 10-year note lower to 1.97%. 30-year bond also lower to 3.18%. Very, very quiet week of economic data this week, folks. Today we had factory orders for December up 1.8%. That was below expectations of a gain of 2.4%. November factory orders revised lower, minus 0.3% from an initially reported flat reading. Tomorrow we've got ISM services for January, Thursday weekly jobless claims, consumer credit, and then Friday trade balance wholesale inventory. So really nothing at all in the way of market moving economic data today. It is another busy week of earnings, so we'll check in on some earnings reports in just a little bit. But tech stocks week today, and a lot of tech names under pressure. Really surprised to see Amazon.com's breakout fall flat on its face here. I don't know if this is telling of more telling of or symptomatic of perhaps bigger problems with the broad market here, but Amazon chart looking quite ugly here. Very weak technicals. Still holding above its 50-day simple moving average, basically back down to its last breakout area at 263, but Amazon been under a lot of selling pressure over the past 6 sessions, down another 1.9% today to 259.94. So a little more than 3 or 4 points below that last swing point of 263. So very shaky, suspicious price action in Amazon. Nice earnings from Google recently. It is performing well, but the stock did get a downgrade today from BMO. Not a huge downgrade, just downgraded a notch to market perform from outperform. BMO did maintain a price target of $7.90, but you can see Google's chart looking a lot better than Amazon's at this point. Shares of Google down close to 2% to 760.48. What's a show where we don't get a quote on Apple? Apple underperforming today, down 2.1% to 444.01. Don't look now, but Apple threatening with a break below this 435 level set last week, or maybe just late the week before. But Apple still, looking pretty weak here. I'm hearing more and more people calling this a low risk, high reward stock due to valuation and the fact that it's gone down so much it can't go any lower. Technicals are saying this thing's not heading higher anytime soon. Remains to be seen if some headline could come out. Maybe Apple's going to do something with its cash. But we'll have to wait and see what happens there. But Apple's still very, very weak here. I don't look at Apple as a low risk, high reward stock. I look at it as a high risk, low reward stock. In fact, the complete opposite. You just have a stock that continues to be dumped by institutional investors here. I don't know why retail investors would want to be playing in this stock right now. As an individual investor, you want to own stocks, you want to buy stocks that are being accumulated by funds, not being sold by funds. Kind of investing 101. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you, 877-927-6648. Let's go to our first call of the day. Talk to somebody right in my backyard here. John in Burbank, California, wants to talk Renasola. Not sure of the pronunciation there. How are you doing today, John?
I'm doing great, Ken. I really appreciate your show, and I'm just wondering why the solar sector seems to spike during a sell-off.
Why solar stocks are outperforming here during the during the market, at the cusp of perhaps a market pullback here? Is that the question?
I know the charts don't look necessarily good, but there seems to be a breakout.
Well, yeah. I mean, we have SOL here. Renasola, $2 stock that has made a nice move, since the market lows in mid-November, basically has doubled in price. It's a stock under accumulation. Fundamentals, I think, are still very very uncertain. Not great visibility in the solar sector in terms of earnings. And I haven't really gone through the group too much. I know First Solar was a name I used to follow. It's been under some selling pressure. Was recently around 35, and now fell below its 50-day moving average, trading around 28, 29. So. it's not a sector that I follow that closely, so I don't have a bunch of names right at my fingertips here that I can really offer you much insight on. The reason I don't follow the solar stocks that much right now is just, again, it's just kind of a lack of earnings visibility, questions about subsidies going forward, and so I don't, SOL, it's under accumulation, definitely. There's another kind of recent new issue, Solar City, SCTY, that I'm kind of looking at in my screens here, that there's some growth, decent growth going on there, a little bit of a pullback, but I know it's a sector that a lot of people like to play in. Are you thinking about buying a stock in the sector, or are you just more observing it at this point?
I'm in SOL. My limit order hit at 205 today, and I'm just noticing about 4 or 5 other solar stocks. TSL also up today. So I just thought it might be kind of like a bear market hedge.
Yeah, I mean, you always want to pay attention to stocks that are moving. I mean, here, the other thing you have to keep in mind here, John, is that this is really the first day of meaningful selling in the market for several days now, so just because I started off the show by looking at the Dow, it's still trading above its 10-day moving average, so we're still in an uptrend here, and I know there are a lot of people calling for a pullback here, but like when the crowd is really slanting, I've heard, if I had a dime for every time I've heard the market's going to pull back over the past 3 days, it's been a pretty common consensus. Would you agree with that? Are you hearing the same thing? A lot of people calling for a pullback here?
Well, most of them I'm fully invested, but I wanted to get in on maybe some solar things that go up when the market goes down. I also own Yelp, and I know it's going into earnings this week. I'm curious, would you sell Yelp prior to earnings this week?
Well, let's take a look at Yelp. They're coming out with earnings this week, you said? I
believe so.
Yeah, I don't have their earnings date handy. I mean, Yelp is a company that's kind of trading in a really in a range here, right in between its 50-day and 200-day moving average. It's in kind of like this channel between 1984 and 2158. This one, again, it's kind of a laggard, sluggish stock. There could be some good news in terms of earnings, but in a situation like this, I mean, do you have a cushion in it? Are you up on it, break even, kind of treading water? Where are you at with Yelp?
Yeah, I'm down about 3%. So
so in this situation, I mean, your risk is kind of skewed out of reward here. I mean, it's one thing if you had. Sometimes if I have a big cushion in a stock, I can afford to sit through an earnings report. In other words, like a 4 or 5% decline. If investors decide to sell the news and take profits, I don't mind giving back a little bit of profit, but that's only if I have a cushion. In a situation like this, you're down 3%. I mean, you could easily sell half of the position and hold on to some, but then you're still kind of exposing yourself to, if it's a disappointing quarter, that that 3% loss could easily be 10% at the drop of a hat. So This one, the risk reward seems a little bit out of your favor at this point.
Well, great. I really appreciate your insight, and I enjoy your show very much.
Okay, John. Appreciate the phone call. Thank you.
Okay, thank you.
All right, we're going to talk to Max in Houston. When we come back, we will be back in about 3 or 4 minutes or so. Sit tight, Max. We'll be right with you. Ken Shreve, Breakout Investing on TFNN. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Just finishing up a thought on the solar space. We just heard from John and Burbank had some questions about solar stocks maybe being actionable here. The most interesting solar name that I can see right now is Solar City, SCTY. This is a company that has actually had a very successful IPO that came public in December at $8 a share. The stock trading right now at $14.80. There is some top line growth at this company. It's not profitable yet, but there is some top-line growth here that I think is worth paying attention to. And Elon Musk is the chairman here. He's not the CEO, but he's the chairman of the company. He's associated with founder of Tesla Motors. But Solar City looking very strong here. It's not buyable. This is a stock that has been a great performer since the IPO, but it needs to base. We need to see just an IPO base form here. Again, other solar names just not speaking to me. First Solar, a break below the 50-day moving average recently. Renesola, SOL, $2 stock. I don't really focus on low-priced stocks like that. So SCTY, Solar City, looks to have the best potential in the solar space. All right, next call of the day, we're going to go to Houston, Texas, and talk to Max. I believe he wants to talk Goodyear Tire. Appreciate you hanging on there. Max, how you doing?
I'm doing just fine. Thanks for taking my call. I was curious, based on your breakout investment technique, is GT negating the breakout right now with the price drop today?
Well, you basically it's a stock that still it still looks okay to me from a technical perspective. You did have a nice if you're watching in Tiger TV, you can see that you had a technical breakout. Volume never really came into the stock, but the actual breakout day for Goodyear was at the very end of December, on December 31st. It it broke out, hit a high of 1465, and now it has basically come all the way back down to its buy point, which is not uncommon for a stock to do that. The line in the sand right here now, Max, is the 50-day simple moving average, and that's what you want to watch at $13.32. It's only about 15 cents above that. If Goodyear Tire breaks through that support level with some downside volume, then you've got a failed breakout on your hand, and probably a stock that's not going to give you meaningful returns anytime soon.
Okay, all right. Well, I appreciate your time and the. I'm long, but I'm thinking about. I just wanted your opinion because it looks like it's acting a little weak today. With the market, obviously.
Yeah. No, it's coming back a little bit today. It is underperforming a little bit. It's down about 2.25%. But as long as it's, a stock like this, if it's a strong stock, strong stocks buyers tend to come in and support it at key support levels. And right now, that 50-day simple moving average at 1332 is support. And if it breaks below that 1332 level, maybe you can sell half and then give it just a little more room, but a break below, 13, it would be stick a fork in it, it's done kind of situation,
Okay, that sounds great.
Okay, Max. Right. Thanks a lot. Appreciate the call.
Really appreciate it. Bye-bye.
Okay, bye. Goodyear Tire and Rubber GT. Yeah, just well, it's kind of an iffy time right now for stocks. There's no question about it. I can listen to the argument. I can certainly hear I can hear that side of the argument that, hey, we've come up a lot. Stocks are due for a pause. When I look at the number of extended stocks out there in the financial sector, I can look in a lot of different sectors, a lot of different subgroups in the market, and see a lot of extended stocks. What have we been talking about in the past 2 weeks on the show? When I look through my screens, there's very, very limited buying opportunities out there. You don't want to chase. You don't want to buy a stock that's 5, 10, 15, 20% past an entry point. And you want to, it'd be nice to find actionable buying opportunities, but, all of the big leaders, frankly, started coming out in December, early January, and here we are in February, and there's just a lot of extended stocks out there. So that in and of itself is a good reason why, the market could pull back here. But, again, looking at a chart, let's take a look at a chart of the Dow and see how that's doing here. We've got about 20 minutes left to go in Monday's session, and the Dow is at its session low, but it's sitting right at its 10-day moving average. At 10-day line is at 13,872. The Dow is at 13,888. So still a few points above that 10-day moving average. A pullback to the 20-day moving average, very mild, percentage-wise, a very mild pullback. And again, even if the Dow were to come down 500 some points to its 50-day moving average, that is, again, really going to coincide with a pullback to its last breakout area, which is not unusual, not out of the question. If you do get a pullback of that magnitude, it is going to, a lot of sellers are going to get shaken out of the market. A lot of these extended stocks are going to come down to key support levels. Remember, the Dow coming back to its last breakout level is going to coincide with a lot of leading stocks out there coming back to their last breakout areas. And again, the strong stocks are going to find support there, and then they'll I'm sure there are going to be plenty of examples of stocks starting to move higher again. I really am not envisioning a pullback of more than 5% for the market here. I think the fundamentals are in place for more strength. I wasn't all that concerned with this preliminary fourth quarter GDP reading that showed contraction. I think the numbers underneath there was enough good news in there where we're probably going to get an upward revision. Remember, there are going to be two more revisions to fourth quarter gross domestic product, but I think the pieces are in place here for. I think the market can keep doing well here, but during market uptrends, you get these little pullbacks, sometimes 2-3%. Sometimes 4 or 5%, but it does do a good job of shaking out some of the excess that has been working up, and I suspect we're gonna see that sooner rather than later. So, what am I doing with stocks in the Ultimate Growth Stocks model portfolio? We've got gains in a lot of stocks. We want to be careful not to give these gains back. So, a gain of 15%, am I willing to let that go down to 9 or 10%, and wait and see what some of these stocks do around support? Yes, at this point I am willing to do that. But if I continue to see signs that money is coming out of this market, and you see more stocks like Amazon coming back down to buy points whose breakouts really are not looking good. Nothing wrong with taking a little money off the table, selling half positions, getting out of the market's way here. So that's kind of how I'm approaching things right now. My next weekly update is coming out tomorrow morning. So if you want to check out 30 days free of Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. Just click on the newsletters tab, then investment newsletters, and you can sign up for 30 days free. Next update tomorrow. In between weekly updates, I send out buy alerts, sell alerts, market updates, things like that. So definitely, I think I can safely say kind of moving towards a defensive posture here as opposed to offense, as opposed to back in December, early January. We were definitely on offense, adding new initiations, putting out buy recommendations, and that ended up being the right call, because right now we are sitting on some some nice gainers, and we want to give those gainers enough time to work. One stock here, a little bit disappointing, Facebook, FB. Facebook, you can see here, is trading underneath its 50-day moving average. But again, Facebook basically coming back down to its last buying area here, right around 28. So even though it's a little bit below its 50-day moving average, again, a pullback down to the last buying area. Too early to give up on this one yet. We have given some gains back here. I was hoping that Facebook would firm up at this support level. It is, as you can see, slightly below it. So we'll keep this one on a tight leash, and we'll monitor Facebook, but a lot of shaky, a lot of kind of iffy action in growth stocks that we follow here. So definitely taking our foot off the accelerator and then some. Really not in a rush to buy anything new. You look at a stock like Celgene, big breakout for Celgene over a significant resistance level at $100 a share. We're talking about Celgene made a nice move starting in late December. Bullish presentation at the J.P. Morgan Healthcare Conference in San Francisco. Very bullish revenue guidance from the company. Makes a move from around 82 up to 100, starts to move sideways tightly, sitting just underneath 100, and then it breaks out in heavy volume over resistance on Friday. It rises about 2.5%, and then what does it do? Today, it is down 2.5%, so giving back all of Friday's gains back into this consolidation here. Not unusual price action, but again, price action that reveals a little bit of uncertainty around some of these growth names here. Other headline stocks today, let's take a look at Herbalife. Of course, big vocal battle being between Bill Ackman from Pershing Square Capital and the CEO of Herbalife. There are other high-profile hedge funds that are long the stock, and Ackman is short. Shares of Herbalife pretty wild day of trading here. It hits a low of $30.84. Now it is trading at $35.59. The volatility here is just unbelievable, but it's now up 1.5% to $35.59. New York Post, not exactly a business publication here, but they did report that the nutrition company may be under investigation by the Federal Trade Commission. Herbalife immediately came out and demanded a retraction. Apparently, investors like the sound of that because, again, after hitting a low of $30.84, Herbalife is all the way back up to $35.59. Earnings due February 19th at Herbalife. Look for bottom line growth of 20% to $1.03 a share. Sales up 19% to $1.05 billion. All right, let's take a look at shares of... Boy, the allergies. There's something in the air today. These certain times of year in California, we get these Santa Ana winds that blow in from the desert, and I am not prepared because I haven't had allergy problems up until today. So bear with me here. Cyberonics, CYBX. Boy, this one has really taken a hit lately, but big rally for Cyberonics today, up 5.5% to $46.77. Last week, a lawsuit filed by a former employee was voluntarily dismissed without prejudice. Investors taking that as good news. Cyberonics is an interesting company. They work in the field of neuromodulation. Its VNS therapy system is FDA approved for the treatment of refractory epilepsy and also treatment-resistant depression. The system uses a surgically implanted medical device that delivers pulsed electrical signals to the vagus nerve. So Cyberonics in rally mode today. And how about the volatility in a very liquid large cap name here, Anheuser-Busch InBev? I mean, here the stock is just, breaks out in heavy volume over 89 in January. Then last week on, I think it was Thursday last week, falls apart down to its 50-day moving average, bounces back sharply on Friday, down another 5% today to 87.69. The story here, downgrade today from Bank of America to neutral due to regulatory uncertainty over its pending acquisition of Modella. Apparently there are some stumbling blocks there that Bud still needs to overcome, but tremendous volatility in Anheuser-Busch InBev recently. Taking a look at some earnings reports today. MWI Veterinary Supply. Monster move for this stock today. Very bullish move. Huge volume, up 7.2% to $123.83. This is a company that distributes animal health products to veterinarians. Huge revenue beat here. The consensus estimate was for revenue of $532 million. They came in at $573, almost $40 million above the consensus estimate. That was up 24% from a year ago. Good beat on the bottom line, too. Earnings up 26% to $1.32. The estimate was for $1.19. So MWI Veterinary Supply, ticker MWIV, outperforming nicely today. Let's take a look at China-based Sohu, S-O-H-U, Sohu.com. Showing relative price strength ahead of earnings today, down 5.7% to $46.40. Earnings here down 46% to 73 cents a share. That was 20 cents better than the consensus estimate, but the revenue up 22% to $299.5 million. That was also better than expected. Sohu is a Chinese internet portal offering media content, web search, gaming services through Sohu.com. So a lot of sellers in Sohu today. Stick with me, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing, checking in on the markets here. About 5 minutes left to go in Monday's session. Still not a lot of juice behind the selling. We do have major averages pretty much at session lows here. Selling intensifying as we put the wraps on Monday's session. But right now, volume on the NASDAQ tracking between 5 to 10% lower than what we saw Friday. That was 1.97 billion shares on Friday. 5 to 10% lower on the NASDAQ, and on the New York Stock Exchange about 10 to 15% lower than the 752 million shares. So the fact that volume on both exchanges looks like it's going to come in below what we saw Friday, at least, is the silver lining beginning to the selling today. Taking a look at the Dow, it is down 137 points, 1% decline to 13,873, basically sitting right at its 10-day moving average here. Checking in on the S&P 500, we'll see that the benchmark index is also at its session low. In fact, it has given up its 10-day moving average. We'll see if that brings its 20-day line into play at 1485. The S&P 500 right now at 1496. So it's got about 11 points to go to get down to that 20-day moving average. Again, with the S&P 500, similar situation to the Dow here. A pullback down to the 50-day moving average, going to be, about 4 or 5% pullback after a 10, 11% move since mid-November. And this 50-day moving average, not coincidentally, basically coincides with the last breakout area here. So while a pullback down to the 50-day moving average for the S&P 500 will possibly cause some short-term pain in portfolios, again, I think that 50-day it will end up being a support level here. That's my story, and I'm sticking with it for now. NASDAQ Composite has a slightly different look than both the Dow and the S&P 500. You can see the NASDAQ Composite flirting with a break below its 20-day moving average, basically sitting right at that support level right now. NASDAQ last trading at 31.33, 20-day moving average at 31.32, the 50-day for the NASDAQ down at 30.57 thereabouts, again coinciding with that last breakout area. So at this point, a trip down to the 50-day for the NASDAQ clearly not out of the question. And you know what? Again, maybe some short-term pain, but it wouldn't necessarily be a bad thing because it's going to give a lot of these extended stocks time to catch their breath, pause, consolidate, and I suspect you're going to see some pretty attractive new buy points. Still like the way Nation Star Mortgage Holdings is trading here. Love the fact how it gapped up right here, came down in mostly light volume, filled the gap, is starting to work its way higher. This is, it brings the possibility of a breakout over 40.61 into play. The question is, you need a healthy market for breakouts to work. Market is still in an uptrend here. Definitely selling pressure starting to build, but Nation Star Mortgage Holdings right now, out of the three mortgage servicers that are out there, Ocwen Financial, Walter Investment Management, and Nation Star looks to be the most solid at this point. Tomorrow, we're going to hear from ARM Holdings, probably best of class, best of breed among the chip designers. ARM Holdings stubbornly holding on to gains here ahead of earnings, down 1.3% to 41.96, but still holding near highs. A lot of optimism around its earnings report. They're expected to do 19 cents a share, up 12% from a year ago. Sales up 10% to $237.4 million. After the close today, Baidu, B-I-D-U, going to hear from them. Gilead Sciences, Solar Winds, and Yum Brands all due after the close today. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day, folks.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.